There are a lot of technology companies in the Seattle area. So let's say you work for one of these companies and you did well on your stock compensation, something like stock options or restricted stock units or something like that. Or maybe you bought shares of Boeing stocks many decades ago, or maybe you inherited them. When Boeing was, remember, the single most dominant company in Seattle? In any case, let's say that the value of your stock, either your Microsoft stock or Boeing stock, it grew to $100,000. And let's also say that you don't need those shares to live on or for your financial well-being, and you really want to give them away to the North Shore School Foundation. But you're on the fence because your cost basis is really low. You paid $10,000 for it. So what that means is that if you sell the stock, the shares for $100,000, and your cost basis is $10,000, the difference, the $90,000, is a capital gain. So you'll have to pay tax on that $90,000 gain. If your tax rate is 20%, that's the capital gains rate right now. The tax rate, the actual tax amount is $18,000. Ouch, right? But wait, what if you don't have to sell it, but instead just donate the stock? What happens then? Well, first of all, how much do you think you get to deduct? $10,000 because that's how much you pay for the stock? No, you get to deduct the entire $100,000, the full value of the stock. It's treated exactly as if you sold the stock and donated the proceeds. So you get the full deduction of the full amount, the full $100,000. So you might ask, so whatever happens to the $90,000 gain? Well, guess what? It just goes away forever. That's if you donate the shares directly to North Shore School Foundation. So basically, you get to double dip. First, you get a tax deduction for the full amount, $100,000 in this case. And second, you don't ever have to recognize a gain of $90,000. So assuming your income tax rate is 30% and your capital gains rate is 20%, so there are two different rates depending on the type of income. So your income tax rate is 30%, your capital gains rate is 20%. You save $48,000 in taxes, $30,000 from deducting $100,000, and $18,000 from not having to report and report the $90,000 gain and paying tax on that.